imbalance selling. So I project those trades onto the charts. As we project those trades onto the charts, where did the selling come from, guys? We took out the 95 wholesale into that imbalance of selling area that we already know about. And that's where the sell came from, back down to 91s, guys, yeah? Back down to 91s. Did I not give you a target price of down at the 91s earlier? Did I not suggest to you guys that we had that downside target already cleared away in our trade narratives and our thoughts? And when you look back at the trade, you think to yourself, oh my God. We went from 96.5. Remember, I told you this is the marketplace. Remember that? Remember we did the big target price. We suggested with the big target price, we did the measured moves. If you were in early enough this morning, you would have been listening to us talking about this whole trade. And we gave you the bottom print here. We suggested that the big target price would obviously run that storyline there. And we suggested it'd probably get down to about 91s. We did the drawings. We did the ideas behind it. We showed you what we were thinking. There it is. There's the target price there. I mean, it's just ridiculous when you think about it. So we went from 96.5 this morning. We added to the trade at 95.30s. And we got down to a price of 90.50s. So there's a $4,500 winner if you decided to draw a box, guys. If you decided to draw a box, wait for the structural entry, you just made $4,500 per contract on your oil shorts. So can I assume all the oil traders got it? And would you explain to me, if you didn't get it, why you didn't get it? Why did you not get it? Because we had a red cell here for a structural cell. So you could have taken a structural cell there. It does okay, scratches you out. We had a red cell for a structural cell here. So a structural cell, that's obviously a little bit problematic, stops us out for a loss of 2%. And then we had a red cell here for a structural cell that doesn't get stopped out. And that's the one that works. So we had one that made some money and scratched here. We had one that got a full stop out of 2%, or whatever your stop out percentage is, if anything. We had a full stop out on this structural cell, a systematic cell here. And then we got one in here that did not get stopped out, that then broke through the various levels, broke through the various structures, and eventually traded the big target price at the bottom edge. Now, what was that in terms of percentages, guys? Surely we're not going to look at the percentages. Well, why not? Let's embarrass you even further. $25 times our money. %50 return on your money, guys. 50% return on your account using a 2% risk. Pretty good, right? Pretty good. So there you go, guys. How easy is it? How easy is it when we already gave you those sell-side imbalance levels? How easy is it when we already gave you that 95 wholesale? How easy is it when we told you it was sell-side only? We actually went through that whole conversation this morning to all 1 or 2 oil traders that were in the room this morning. So you all knew about it if you were an oil trader. You knew the supply was massive. You knew that this is what we were talking about here. You knew the supply line was giving us a big sell-off. We zoomed into that phase there. We zoomed in even further, and we says, well, this is going even further, guys. This should be below the bottom edges here. And we knew it was going even further from that storyline. And it was very, very straightforward to keep working that short trade. We says, if you're going to buy it, you can only buy it at lower prices. You're going to sell it, you can sell it anywhere and you'll make money. You'll sell it pretty much anywhere and you will make money. That's what we told you this morning if you were in, right? It's exactly the words we used this morning if you were in.